Hello guys, this is Soji and you are welcome to Soji Forest. To all our new subscribers, thank you for subscribing to our channel. And if you are coming across our video for the first time, please do well to like, share, subscribe to the channel, watch our previous video, which I believe it will be of great benefit to you as a trader. In today's video, we want to look at how moving average are used in technical analysis. So our goal, which is our objective for this video, is for us to see how we can combine our moving average, which is our indicators, in line with technical analysis. So this is my chart. As you can see, this is class 1000, and I want you to pay attention to this zone at a time price is at our lower Bollinger Band, which is this point, and then from there price begins to push to the upside. So going by our indicator, we have said in our previous videos that when you have price below the middle Bollinger Band, it's a downtrend, and of course it is not just being said. You can see how price has been respecting the lower Bollinger Band, and you can see how price is giving us a series of high, lower low. Okay, this is not valid. Lower high, lower low. Let's go this way. High, low, lower high. Okay, lower low, lower high, lower low. So you can see how price gave us all of this: lower high, lower low, lower high, and a lower low. Now we can do this in a technical way. And how do we do it? We can pick up our trend line and connect this point together. I remember our trend line is our technical tools. So having established this, if you are a trend line trader, you are now waiting for price to pull back so you can have your entry, and which plays out safely. Price pull back, came, pulled back, gave us this candlestick pattern, right? Price actually pulled back, gave us this hammer inside that cycle, which is our candlestick pattern and our signal for a sell, and you sell. But remember, if you observe this particular price movement over time, you realize as well that price has been respecting the moving average. What you are seeing here, the blue moving average, is exponential moving average. The period is 25. So you can see that price has been respecting this and the middle Bollinger Band. So how do you combine this together? You can see that this is your trend line, right? And then your second confirmation is the fact that price pull back to your trend line zone, which you are of course expecting price to pull to it. Price pull back to it, right? Gave you a candlestick pattern, which is a price action, and then closes with this follow-up candle and it's happening around the zone of your EMA 25 and your middle Bollinger Band. So this becomes a double confirmation. So remember, most of the time the challenge most people face is that they focus more on the indicator or the technical tools rather than focusing on what is important. Your focus is not on the trend line. Neither is your focus meant to be on the moving average. You can either lose money or make money with the price. So your focus should be on what is making you to lose money and what is making you to make money. So you should not be reading what is not doing this function. And what is that thing that is not doing this function? The moving average is not what is making you to make money. The moving average is not what is making you to lose. The trend line is not what is not making you to win. Neither is the trend line making you to lose. So what is making you to win and to lose is the price. So for you to use these tools effectively is for you to identify how the price behave around them, not how the moving average behave, not how the trend line behave. Once price come to the zone of this moving average, price come to the zone of this trend line, what is the behavior of the price? That is why the most important thing is not whether you trade technical tools, you trade smart. What is important is understanding the price behavior. Whether I like it or not, we have two conditions in the market. It's either it is bullish or it is bearish. It is either it's a green candle or it's a red candle. So it is a game of two. It is either you win or you lose. It is either stop loss or take profit. It is either buying or selling. So you pay, and one thing is responsible for all of this. It is the price. So your focus is on price. How did price behave in those zones? You say you are trading technical indicators. The challenge is not moving average. Here is another instance. Here now, we say whenever price closes, I would have said in a normal sense that when the moving average cross the middle Bollinger Band, it should be an uptrend. You might have heard of moving average crossover, but no. It should be that when price closes below the middle Bollinger Band, that is a change of direction. And here you can see the price came all the way from here and closed above the middle Bollinger Band. So why am I saying the right thing is price close above them? Because it is the price that moves the EMA 25 to cross the middle Bollinger Band. It is not the EMA 25 that moved the price. So my focus is not what EMA 25 did. My focus is what did price did that makes EMA 25 to respond, to follow up. So it closes up here and it becomes an uptrend. Now the mistake many of us make is that once you see this crossover, you were told that once you see a crossover it's an uptrend, so you buy. No. And that is why it will make you look as if, when you trade price action, you are doing something either superior and the other people trading the other pattern are doing something inferior. No, that is not how this thing works. This thing is pretty much simple. It is the same price that went up. All you need to do is be patient enough, because price has to make an impulsive move for it to be able to break structure, for it to be able to change direction. And if you look at it from this area, you see that this high now was broken by this move to the upside. So we are having a BOS here. This is our break of structure and we are having it right at that point. Okay, so having established that our break of structure now is obviously at this point, our break structure, the next thing you are looking for, even as a technical indicator, you need another pullback. You need a second low, which is now an uptrend. You need a higher low for you to be able to connect your trend. And here we have a higher low. So we are going to connect our trend line. So now this is our trend line. So now that we have connected this trend line, we will now begin to see how did price behave when it comes to the moving average and when it comes to our trend line. So here we now saw that, okay, price pulled back to our moving average. So what is the behavior? What did price do when it came towards our moving average? We'll move to our 15 time frame. We want to see that behavior and look at it. So what we saw on that H1 is what we are seeing here. Okay, now we have established that we are in an uptrend from that direction, and truly when we came to this lower time frame, price has well proved to us that there is a cross. Price has closed above this, and truly we are in an uptrend. Then what happened next? You can see from that time frame, price pulled to this moving average. So what is the behavior of price? Then we begin to look, what is price doing in this zone? What is price doing to the moving average? Not what is the moving average doing to the price. And as you can see, a chart pattern. This is a bullish flag pattern. And all you need to do is you mark out this your chart pattern. It's a continuation for a buy. And you can see that price break out of it. So when price break out of the chart pattern, you buy. You could have been in this trade to the upside. So you have taken your entry. This has ended in profit. What is next? Next again, you are still waiting for price to pull back and see what price do around this zone. And price will pull back using one of these chart pattern. Again, price pull back using the bullish flag pattern. This is an uptrend. And look at it. When it pulls back, it break out of it. You buy. Your stop loss is below. And you can see how perfectly it plays out. And if you want to do this thing on that same 1 hour, you could have waited for when price pull back to this moving average. You are looking for what is price doing. Price gave you a bullish. Price gave you, we are here now. Price gave you a bullish engulfing candle. And here we have an evening star. And you can see that move. And again, you keep following it that way. Here now, price pull back towards this zone. Remember, your line has connected your trend line. So you see that most of the time when price comes to the trend line, the moving average is there. Then you begin to understudy how price behave around that zone. And if you are to be on your lower time frame, again this time you will see the same scenario happening here. Another bullish flag pattern and price break out of it. You can see that price break out of it beautifully here. Your stop loss will be below this trend line, and you can see that move to the upside. And the same thing keep happening here again. We have another flag pattern, price break out of it, and you see that move. So all these points you see me marks are point of its entry, are trades that I've already taken. This thing is pretty much easier when you follow, you understand, and you do the right thing. So all you need to do is backtest this. You see how my chart is marked out with these patterns because it plays out for me so much. Personally, I trade boom and crash a lot, and that is why you see most of my chart is marked up with boom and crash, and this thing keeps playing out over and over again. So you go to the video again, watch it, go back to your chart, back test. We did a particular video on how to identify chart pattern. You can go there and watch those videos so that you get yourself familiarized with how these patterns are formed, so you can take advantage of it. Combine these indicators together and you will see how it will change your profit to the next level. So the indicator is not what makes you profitable, neither is it the technical tools that you are using, but what matters is how price behave when it comes to that zone. If you understand it, you are good to go. And if you believe you have gained something new, you have learned a new thing from this video, please do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we published our next video.